This is a three closed-in question. I didn't get one question tonight, but let's hope we can get this here, okay? Three closed-in. The only difference between houses and businesses and the processing advantages, one answer only, please. What I'm saying is that if you bought a house and you bought a business, what advantage did that business have over the house you bought? There's only one answer. Anybody know what the answer is?
One makes money.
Almost.
The business is gonna pay for it.
Almost. You're close enough. That's not the answer, but that's okay. I'm looking for one answer. What's the difference between a house and a business?
The business is gonna pay for the house.
Close, but not good. We'll give you another dollar.
Okay.
There you go.
Write off?
No.
Business can continue to make you money?
Close enough. Okay. Okay. So, I'll tell you what the answer is. That's the answer. Cash. Cash is the answer. Why is cash the answer? If you buy a house, like I bought so many houses over the years, you have to renovate it. Unless you want to rent it out immediately or you want to flip it and sell it, that's fine. Let's take every down even level. You're going to renovate and you're going to renovate. Now you have to renovate the house, you got to get permits. You could be looking at 3 months, 2 months maybe before you get your first rental check. With a business, if you buy the business, once you take the course, you buy the business with no money down or a little money down, the day you're there, you got cash in your pocket. So the advantage of a business, earnings, and a house, is that you have cash right up front. So you could be taking in $2,000 a day, $8,000 a month. With a house, you gotta wait till 3 months later and maybe get rid of $1,200 or whatever the rent is. So the cost of going into a house, the cost of the deed is a lot greater. Now let these guys fool you that it's no money down is kid. No house ever been bought with no money down. I told you, I bought 225 houses in 1978. I know the difference. And I bought another 14 or 15 in 1993. It doesn't work. You got to pay off the note. Now, there's only one way it works. So here's what I did. In 1993, I bought, I think, about 13 or 14 houses. But I had a home improvement company. I did home renovation. So when I went into these houses to do home renovation, a lot of the senior market, you have widows, husband died, they have little kids, sometimes it's a estate sale. What I did was I would partner with the owner. I would say, okay, you need a faucet, you need a door, you need a kitchen, you need a bathroom, you need a front door, Okay, what I'm going to do is I'm going to put all this in for you at my cost. And what we're going to do is I'm going to get on the back side my money back and 50% of the profits. 1993, I bought like 15 houses, and I did that. Now, the only way you can buy a house with no money down if you partner with the owner. If you have to do it where the owner has to be satisfied, you got to satisfy the debt. I mean, and work. So, don't let these guys give you a lot of nonsense that no money down. It can't be done. Only because you have obligations, attorney will let them do that. So there's your answer between a house and a business. Is the cash that you will receive every single day going when you go. Okay, so let's get back to want to be millionaire. Takes opportunity, what you're going to show them. How you're going to, the opportunity, where you're going to look for opportunities. The knowledge, you have to have business knowledge. You can't teach you business knowledge. They can teach you experience. I mean, they can teach you knowledge and experience. And they can teach you education. Education being what business you want to go into, what's the market, what's the cost, what you look for, what you should be looking at a lease, contract, how to negotiate with the landlord, how to negotiate with the seller. And the other thing is that of the businesses that they've owned, a lot of times they partner with the owner because he's either behind in the rent, he's behind with the vendors, the suppliers. He can't grow because he has no money for supplies, he can't renovate the store. So what I've done in the past is we partner with them like we'll do with you guys if you will come on the second course, up to $10,524, which we're going to get into. So these are the things that you need to become a business owner. And grow your business or get into business and become rich. Like I always say, you can be rich but not famous as long as you're rich. Doesn't make any you have one of the pages, and you don't have to open it right now, but the advantage of buying a business with money down. Just think about this. If you start a business, you may not see your first dollar. You open the door, you're gonna get your first dollar, but it's not a first dollar profit, okay? So what happens is that when you go into a business that you're buying with little or no money down, it's faster, it's less risky, and there's no stress. Just think about starting a business. You have to go to your attorney, your accountant, your bank, your marketing people, go to hold records, go to the Board of Health and get a license and what it is. You have to go to the building code. You got all this crap to do. Before you know, by the time you're done, you're going to be $40,000 just for odds and ends. When you go into something that's existing, it's only transfer of title, and we'll get into that. The other thing is, a business already has clients. Like I said, the day you open your door, guy comes in for a cup of coffee and a donut, you got money. You have to wait for anything else. Financing. With a business that's existing, your financing is about 75% less than your real cost. Now, we have a couple sources that we can help you with financing, up to $150,000 unsecured, and collateral free. All you need is a signature for what's called. So that's $75,000. We talk about fear. You take the $150,000 and multiply it, and you can own 3 businesses. Okay, so you can buy it for $50,000 each. Okay, so take over cost of little money on transfer, generating revenues, cash flow, immediate income, relationship with suppliers. Thirdly, when you start a business from the ground up, you have to now get your suppliers to agree to terms. If you're going into a business that's existing, that you're buying a little or no money down, you're already negotiating with the supplier right up front. And I'm going to take over this business, and I want to work with you with credit. What can you do for me? Okay, well, one of the things that you're going to learn on the second seminar is that when you look at a business, which we're going to teach you what to look at and how to look at it. You're going to look at a business, you're going to say, do you owe suppliers money? Or you say, yeah, I'm 20,000 behind, 20,000 behind. Well, you wouldn't be that way. It'll probably be, let's say, $1,000, just for a number. You can negotiate with the supplier to say, hey, I'm going to negotiate with you. I'm going to give you $1,000, but instead, I'm going to give you an extra $200 for carrying it. So you can make a lot of deals with suppliers, with the landlord, again, which we're going to teach you how to negotiate the deal. That's what it's all about. So if you can get a business with less than 25% little cost, cash flow, income, and work with suppliers. So the other thing is, no business owner should ever start a business from the ground up. It is too costly. Remember I said before, your average business $150,000, and you need at least $75,000. That's average. And somebody's going to tell me home-based business, and that's true. But on average, then you got the $500,000. So on average, you have a $150,000 cost. Would you like to buy the same business with the same volume for $30,000? Instead of $150,000? Would you like to do that?
Yeah.
You can do it, because we're going to teach you how to do it. So, never start a business from the ground up. It's too costly. I just showed you statistics that came up the Census of the United States Bureau. We lost a million businesses, and we lost 100,000 new startup businesses because we're not replacing one for one. One goes out, one comes in. That's not happening anymore. They're going out, but they're not coming in. Because of the economy, they don't have the money. And the other thing is the banks are not lending money on startups. You want to do a startup business, you're going to have a tough time getting money from the bank. Not going to give it to you. No matter how good your credit is, they don't do startups. So, whatever other way you want to do the business, go into a business where you can get one that's already existing, the lease is in place, the equipment's in place, the customer's in place, the product's in place, the inventory's in place. One-third the cost, or maybe less than that. It can be done, guys, but we don't have to tell them. This is called the Institute for Small Business Education. I told you I had a school for 31 years. It didn't look like this. I was a mortgage banker for 31 years. Oh, you had 14 lofts, 137 people on the phone. But we did have a real school, a real training center. And I told you before, my success rate is 90% versus 63% failure. So my goal is to open up this school here in next year or two. It'll be the only school in the country that teaches education, business course, law, accounting, marketing, and everything you get from college. There's no other school in the country that does that. I did it for 27 years. It works. So we want to get back to that and be the only school in the country that teaches that. But we do have a program. Now, you know what a mortgage bank is? What's a mortgage bank? Anybody knows what a mortgage bank is? A mortgage banker is the guy who writes checks. I was a mortgage banker. You came to me for a loan, you were approved, I wrote you a check. No bank, I was the bank. That's a mortgage banker. The guy who writes the checks is a mortgage banker. Real estate broker. Real estate broker is the guy who goes to a real estate office. By law, you have to be a broker and then agents under the broker. Part of my company was the mortgage banker and real estate broker. I broke a business. That's where I did 23,000 businesses. So the real estate broker works with the mortgage banker if you want a company. You usually have 2 licenses, but that's okay. That's the way it works. I dealt with only businesses and commercial property. I never sold a house in my life. I bought it, but never sold it. So let's go about consulting, appraisals, and evaluations. When you guys come on board for the second program, we're going to teach you how to evaluate a business and how to do the evaluation and the appraisal of business. Now, you know, I am so set against banks for what they do to people. And I'm under the firm belief that a bank should be sued if you fail in a business that they gave you money for. And why do I say that? You go to a bank, the only thing they look at is the collateral. They're called collateral lenders. That's all they are. You go to them for a loan, whether it's SBA or whether it's an equity line, they want to know what's your house worth before they give you money. And if you go for an SBA, they want to know what collateral you're pledging for this $150,000 for a loan. So they're called collateral lenders. See, the bank never really evaluates your business. They don't care. They want to know if you fail, how am I going to get my money back? And that's because they want to know. Listen, they don't want to take money, deposits money, and pay for your losses. So they're called collateral lenders. So, but there's not the bank in the world that I know of, and I've been doing banks a long time. They do an evaluation of your business. They have a lease, they might look at the contract, but they never do evaluation. You know why? Because they don't know how. It's true. All they know is work off the numbers, they work off the program, they work off all that. They don't know how to do evaluation, you do. They're always used to do it. So the appraisal, the evaluation, the consultant, this is all part of the package that we teach you how to do it yourself. We have one called self-evaluation. This is a 100-point questionnaire. I created this in 1975, and it has survived since 1975 and over 300,000 businesses, 23,000 businesses. And that's working with one bank for 12 years and a major bank who gave out loans. This is a 3-part program. I have self-evaluation is one. I have 2 other ones called self-appraisal and self-analysis. And what this is the analysis of the individual. You're the individual, whether you even qualify for a business. The other one is if you're buying a business or looking at a business, with this form here, you can fill it out, and then you see the numbers here, yes, no, it's a number evaluation. And then we have another one, it's a percentage evaluation. So this will give you a good idea of what this business is worth and how to do it. So again, we teach you how to do the evaluation and the cost analysis, and how to do self-evaluation, and yourself whether you qualify for a business. So. Any questions on this? What does this all mean? It means it works. That's what it means. See, this is something the banks never use. They don't know how to do an evaluation of a business. They'll go to their journal and they'll look at the journal and they'll look at that kind of material, but every business is different. Remember I said there's no 2 businesses the same as one. One of my ventures was at a call-in talk radio show for 8 years, from 1975 to 1984. It was the #1 call-in radio station for small business education. People just call me on the phone and say, you got a dictionary, you got a book? No, it's all here. Throughout a business, I'll tell you what percentage you pay. So by doing this here, we're gonna teach you how to rate, how to do your business evaluation yourself. This was a station up in New Jersey called WNTR. Did call and talk radio. I was on 267 Sunday morning from 10 to 11. People just call on business questions. So, as of this program, from this program, one of the banks was my sponsor, was Horizon Bank up in Morristown. They were one of my sponsors. And I had the president on the show one day, and we were talking business, that's what he was there for. And I said to him, I said, how come you guys never do an evaluation of the business? It's just collateral. He said, that's what we do. I said, well, why don't we do this? I said, why don't you give me one of your loans that failed? Why don't you look at it? Privacy and money was tough. But they became a good sponsor, so probably took 2 years. He gave me one of his packages to look at. And the first thing I saw was the evaluation report. And I showed him where it was wrong. And he says, well, what can you do? I said, we'll do all your programs before you get the loan. So as a result, for 10 years, I was their chief analyst, and I did 9,000 businesses. See, even the banks don't know what they're looking for. They're collateral lenders, they don't care about, they want your experience, but they don't really care about that. So the difference between what the banks do and what we do is we actually teach you how to do evaluation of businesses. Very simple. So let's go back to the house. What do you think is the key line in this slide? What do you think is the key phrase here, key line? Who's got the answer to the key line?
Running the ads,
Well, what's the key line here?
home for cash.
Still in the.
What'd you say?
Right, your hand.
There you go. Good. Very good. That's worth $2 for this. That's worth $2. Why is that a key line? Did you answer the question? Oh, you did. I'm sorry. Why is that a key line?
Because it's a sure thing. People don't want to leave the homes.
That's the answer. You see, the worst thing about buying someone's house and kicking them out is they have to leave. Kids, school, telephone, credit cards, whatever. I told you, in 1970, I bought 225 houses. I ran this ad. What I actually did, let me back up. What I actually did, I hired people that do, do search on houses. They go to the former records and the deeds. And hired 2 people to go into whatever county I was in and go look for delinquent notices. And so that's what I paid them for. I gave them a commission for everyone they found. So they came back with a whole list. And what I would do is I would send in number 10 envelope, this picture, not this picture, but that paragraph with a picture of the house, and that still live in the privacy of their own home. So now what happens is that they didn't have to move out. Because what I did is I gave them a lease purchase agreement, which I wrote through my attorney, which means that once I bought their house, they had the right to buy it back within 48 months at the same price I paid. And why does that work? Because if you live in a house for 10 years, you probably got $60,000 or $70,000 in equity. Probably. Okay? So if I bought your house for the balance of the note, let's say the note was $50,000, I'll give you a better example. There was a house in Jackson, who I bought from a lady. The house was valued at $279,000. Showed the bank $75,000. I bought it off her, which means she lost $200,000 in equity. But with my program, that you can buy your house back within 48 months for the same price I bought it for $75,000, you did not lose your $75,000 in equity. Because that's what made this attractive. Still live in the privacy of the home. And still buy your house back in 3 or 4 years and keep your equity. You can't do that in today's market because people don't take the advantage of moving ahead and say, hey, I'll buy your house, but you have the right to buy back because you want to make the money on the other end, okay? Now, I made money at closing and points. I didn't lose money, believe me. But the thing is that, how many times can you go buy 229 houses in less than 18 months? You can't do it. But because of this, people used to call me, send me their deeds, call me on the phone, send me telephone, whatever it was. They don't want to talk to you. Oh, the bank's ready to foreclose. I go to the bank, they give me checkbooks all the time. Then I negotiate, yeah, sure.
Oh, I have a question. So if they can't pay their mortgage, how do they pay the rent?
Well, the rent is the mortgage. Oh, you mean, well, here's.
Or how do they pay that to you?
That's a good question.
Yeah.
I'm gonna give you $1. You know why? You know why? 'Cause that's a good question. I'll tell you why it's a good question. Okay? The question is that when you take a mortgage on a house, and let's say it's $200,000, you probably got a mortgage of about $2,300. Okay? Now, once you go through the refi and do all that stuff, let's take it on a level footing. You probably got about a $2,300 mortgage. By the time the 10th year roll around, you're still paying $2,300. Well, you can't pay them when it comes to mortgage. When I come in and buy it, I recast the loan from $75,000. Now you're only paying the rent to me, or the balance to me, at $300. There's your answer. So you're going from $2,300 that you bought the house at $200,000, where now you're only paying me the $75,000, which is the balance, because the bank won't negotiate, because you're in foreclosure, they don't want to negotiate. That's going back then, right? They might do it today, but here's the more than. So now your rent to me, or the rent, well, it's the mortgage to me, it's $300 or $350. You still have to pay your taxes, that was part of the agreement. But they loved it because they saved $2,000 a month, and we were paying taxes anyway. So the answer is, yeah, they loved it. Now they can accumulate the credit, they can accumulate money and come to me in 48 months and say, I want to buy the house back. They already had a clause in the agreement that they could buy it back at that cost. So, why did I buy 225 houses? Because of this. That's why I bought it. I found the key that works, and that's the key that works with the leaseback program. I tied the two together and came up here. You do the same thing with businesses, okay? Here's another one. How did I buy 300 businesses? Very simple. The key here, you know what the key is here? You know what the key is?
Make you an active partner.
Exactly. Well, you're pretty good here. You got a front row seat here, you know. So why am I gonna make an active partner? Do I want to run a business? I don't want to run a business. I don't want to. I don't want to be spending time making ham and eggs in the morning and pumping gas. I don't want to do that. I want to be an entrepreneur. I want to have people do what they have to do. So if a business owner gets in trouble, can't pay the supplier, can't pay the rent, you can't do renovations, gets a broken window, and his insurance is canceled, you have money for insurance, what's this poor bastard going to do? He's broke. He invested $100,000. What's he going to do about it? So, along comes me, I buy you cash, make him an active partner. But what does that mean? You got a business, you're going broke. I'm going to pick up your supplies, I'm going to pick up your rent, you're going to sign an agreement with me that you don't own the business anymore, but you're going to run it. You're going to give me collateral for the money I'm giving you, so you don't take the money and go and sell the equipment at 3 o'clock in the morning, so you're going to give me collateral, you're going to sign a personal note. Yeah, and I'm going to give you whatever it takes to get the business off the ground, $20,000, $30,000. But the guy's got a $200,000 business that he can't sell, because the way more money out of the lease, because he owes money anyway. Or the supplier won't ship anymore because he doesn't have the money to pay the supplier. Along comes along comes Leonardo, me, say, okay, here's what we're going to do. We're going to do this, we're going to make you a partner, you're going to sign the agreement, but you're going to give me collateral for this. I don't care if it's third on your house, I don't care. That gives them a sense of responsibility to go to work every day. Because you're going to give him 50% of the profits on the backside. So now what's going to happen is that he's got a $200,000 business that's doing, let's say $200,000, he's probably doing $500,000 a year. It's a nice business. $500,000, he should be grossing about $150,000 a year. Well, he's going to make $75,000 and still be out of the whole making business. See, it works, guys. If you do it right, it works. And there's no reason why you can't learn what I'm trying to teach you. Very simple. Okay. Any question on businesses? Yeah.
Yeah. How do you actually attract more customers? Like in my situation.
What's your situation?
Well, I have dog do it's a side job I have, and I'd like to try to attract more people into the interest of, having me come and clean their yard.
Oh, you do?
Small
Okay.
fee, and
Okay.
but that's my thing, is trying to, I know that people that do this up in the northwest part of the state.
You go out and clean the backyards.
And there's a 6-month waiting list.
Why you clean the yard, but they clean their own yard?
That's the thing, so why don't we make our own lawns?
Well, once I was there, you need the equipment.
Yeah, but
you need a rig.
do people really want to go out there? And I know people, the few that I do have, and the reason is that, well, it gets them grossed out, they just don't have the time, they might be old.
Oh,
Yeah.
okay. Let me tell you what I did, not on your business, but when I started my home improvement business, which I had for years, but then I closed it down and I restarted again. We got and bought a GMC Savannah 1500 van. I thought I do a lot of carpet work, I do a lot of work. I cleaned it all up, I put shelves in there, I bought inventory, and the first thing I did, I went to the senior market and I put ads in all the senior markets, all in New Jersey. Every senior market. I will do a free estimate of your house on any repair you want, no charge. And then I would go to the clubhouse and I would talk to the president and say to the president, I'd like to do a presentation here next time you have a club meeting. He says, okay, what do you want to do? I said, I want to offer all of the people that live in the village a free estimate of their property, house, we'll do an evaluation, broken wire, the door, a leaky faucet, a cracked toilet, whatever, okay? I'm glad you brought that. So he said, okay, so I started with Holiday City, 1990. In 1990. And then I went in and I had an audience, probably 100 people. And I made some flyers, brochures like I did today. And I said to them, I will come to your house and I will do a free evaluation of the repairs you need. No charge. Well, a senior that's 75 already lives alone and the faucet's leaking, wants somebody come and look at it. So you can do the same thing. You've got to find the market you're looking for that. So
Well, if they just put flyers and do a mailing to that.
he can do the same thing I did, the mailing, the meetings, the
But the
flyers.
veterinarians.
So, yeah. The other thing is that when I went to the houses and I wrote up this whole list of the leaky faucet and the doorknob that didn't work and the screen that closed up, yeah, these women went along. From 1990 to 1993, I think I did 400 or 500 jobs. Just from going in with donuts, bagels, cookies. I did every market. So you can do it. So you do the same thing. Send out flyers to wherever your market is, brochures. You may want to do direct mailing, spend a little money for direct mailing. If you do direct mailing, you want to use the number 10 envelope with a nice flyer inside or something, free inspection, whatever you have to do, whatever your services are, and do that. So that you can now get into the house and then see, basically, because if you don't have a price, one yard's bigger than another yard, obviously. So you want to get the price per yard, so you want to do a free analysis. And use that concept. Now, I don't know how many dogs are in the senior market, I don't know that, but find a market where you have, whatever market you're in, and do a direct mail. And do a free evaluation. Use the word evaluation or analysis.
Get your present clients to refer others to you and pay them.
Oh, I do, I actually, if you give me another customer or a client, you get free scoop.
Yeah, right, you can do that. That works.
Then you gotta promote it.
Yeah, I'm sorry, go ahead.
Sorry, with the example that you just gave, the gentleman was making $150,000 in profit every year over $500,000 of revenue, right?
Yeah. Why didn't you pay the bills?
Exactly.
I'll give you a good example. At a deli I sold one time. And I got my check. I was a mortgage banker and I had sold the business. I got my check every month. And then suddenly checks weren't coming in. So his name was Hank. So I called him, I said, Hank, we got a problem here, because I did have a collateral security, because I wouldn't give him a business without collateral, obviously. So he never answered, well, he answered, but it's one, then they were waiting. So I went up one morning at 6 o'clock, because we opened at 6. And I get there, there's a big white stretch limousine in the front. And I said to the driver, I said, you wait for somebody? I said, I'm waiting for Hank. I said, how often do you come? He said, I come every morning, Atlantic City. So the business I'm talking about was taking in $18,000 a week. But he was down in Atlantic City going $10,000 a week. It happens. They become lackadaisical. They get bored with the business. They get financial troubles because either gambling or divorce or something like that.
So these are the people that you're looking to partner with in a business endeavor?
Well, you partner with them, but you control the strings, though.
Okay.
See, you partner with them, you control the strings. Now, the same thing that we're talking about here, okay, is that whoever signs up for the second course, I'm partnering with them. I'm partnering with them. So if you decide that you want to come and take the second course, it's all day course, we'll partner with you up to $10,500 of services, analysis, payroll, analysis, evaluation. We'll do the whole process, teach you everything you have to know. So you're not partnering, we're partnering with you now. We're going to try to partner with people like that, but that doesn't mean that you have to take every case there is. You might look at 20 businesses before you buy one. So you want to get the right combination of the business, the location, and the deal you can make. Like for instance, you may have a deal where the volume is good, and the guy's willing to work with you, the owner. He's a good guy. He's had never been, well, straightforward. But the landlord doesn't want to negotiate with you. You walk away. Because the worst thing you do is make a bad deal with your money. You want to make a good deal that works for you in the future, now and in the future, that you can make yourself 150 grand over the next year. But you can do it. So you want to make sure that you partner with the right guy. If you want to partner, now you don't have to. But I said there's 3 options. Okay, there's many businesses I took over and just sold. Walked in, picked up the balance of the note, the rent, so maybe it was 25 or 30, turned around and sold for 100 grand. You can do it, but you got to know where to go and what to do with it. You know, how do I get this thing for the right price? I'm going to show you that. Do I want to partner with him? Not all the time. You want to partner with somebody that's going to give you money back, profit on the business itself. Now, a lot of businesses you want to keep. You may want to run it. You may have somebody you want to partner with. You can do that. You may just turn around and sell it. See, most businesses, if you can go in and find out exactly what the problem is, which we're going to teach you how to do that. You can go and find out the problem. You can turn around and sell within 6 months. Now, if you want to run it for 6 months, you don't have to, but you can put the fellow on as a partner for 6 months. You can do that. So, there's a lot of ways. Boy, you did that?
No, I gotta pick my kid up.
Okay. There's a lot of ways you can do it. It depends on what business you're in and what you're negotiating. Now, you don't have to be partnering with everybody, but some you want to be because they got a good business, they're just off track. Maybe their profit's wrong. Maybe their lease is running out, you have to renegotiate a new lease. So there's certain things you can do and still make a lot of money at. See, every business has a different situation. No business is the same, like I said before. You want to know where you're going with the business, how you're going to get there. So when you take the second course, you're going to learn what to do, not to do, how to do it, and whatever it is. That's how it works. It's like flipping houses. You want to buy every house that's the same? No. I mean, some houses need $100,000 worth of work, some will need a paint job. The paint job is going to give you a faster profit, the other one's got to put money into it. So it depends on what you want to get into and how you do it.
Ladies and gentlemen and business owners, thanks for listening to part 4. If you would like to listen to part 5, please go to the next video.